Nvidia shares are up nearly 5% today and more than 9% despite last week's sell-off. While the volatility left some investors wary of the big AI names, our next guest saw the dip as a buying opportunity, upping his stake big time. Let's bring in fast money trader and Grasso Global CEO Steve Grasso. Give me the deets, Steve. It's good to see you.
How you doing, Kelly? Yeah, this could have. I always love hindsight when it proves you're right. This was a binary instance, though. This could have went very bad against me if the macro market sold off. It didn't, so I look great, on a micro basis after the fact. I own Nvidia. I originally owned Nvidia, I should say, in the 120s was my average, and I expanded that position considerably. So now my average is around 102. So that's how much I was buying on that dip. Once again, that dip could have gained more strength. Market could have sold off more precipitously. It didn't. So once I started to see the market solidify, I really leaned into that position for Nvidia.
What's the exit strategy?
Yeah, so normally, when those of the people that follow me on Twitter or watching on Fast Money, I usually trade around a core position, which means that I'll have my core positions and then I'll trade tails around it. The tail actually became the core. So I think that the stock probably trades back up to the 120 range, and shorter term, obviously 115. That was just a blink of an eye of where it was today. So I think you're going to see higher prices. I think the market has to perform well. Market doesn't perform well, this is definitely a momentum stock, but I think you're going to see a 120 print sooner rather than later in the name.
Hold on to your portfolios, investors. Nvidia is once again poised to mesmerize Wall Street as CEO Jensen Huang prepares for what might be the most crucial earnings call of the decade. If you've followed the saga of Nvidia, you know it's a roller coaster of innovation, market swings, and sometimes jaw-dropping predictions. Analysts like Dan Ives from Wedbush Securities are buzzing with anticipation, suggesting that the upcoming earnings report could be a game-changer for the tech giant and its stakeholders. Tech titans such as Microsoft, Amazon, Alphabet, and Meta are part of this thrilling narrative, reinforcing investors' optimism as we wade through volatile market seas. So, what did Dan Ives basically state? What are the reasons behind this statement? And what is the implication of such statements on Nvidia's stock? This is what we will go through in today's video, but before we do that, if you want to keep up with the latest updates of the stock market and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. That said, back to today's video.
Yeah, because I wonder, not that the bloom is coming off the rose, but that there's a sense when you see Apple Intelligence coming out without being trained on Nvidia chip, I'm going to get some of these other rollouts that don't necessarily require those big, expensive workhorses. Are they kind of telling people that there's a way to participate in the AI rush without it necessarily being that Nvidia share price doubles and it becomes a $6 trillion company or whatever? Have we kind of dialed that back a little bit, I wonder?
Yeah, I think that's a valid premise. But when you think about it, they still own 85% of the market share in AI. So maybe to the extent of the chip that's going to be used could change depending on what sector of the economy that you're in. But ultimately, if you want premium, you're going to go with Nvidia. Everyone that we heard from in large cap tech is increasing their spend in chips. Do they all need the highest price chip? Maybe not, but they're all going to be buying some aspect of Nvidia, and nothing grows to the sky, Kelly, to your point. But I think we saw that drawdown pretty effectively last week, and I think people are getting back into it, understanding that the fundamentals are still sound.
If stock market investors were skydivers, the Nvidia-led AI boom would be their most exhilarating dive yet, risky but potentially rewarding beyond imagination. That's not just hyperbole, it's backed by numbers, market trends, and big names vowing their faith in AI. Dan Ives sets the stage with a theatrical flair, calling the August 28 earnings report a drop-the-mic moment. In his tweet on X, he crafts a dramatic narrative where trading floors would grow so silent that you could hear a pin drop. But behind this theatricality is an undeniable truth. The AI revolution is here, and Nvidia is its linchpin. With AI chips accounting for more than 40% of Nvidia's revenue, the forthcoming insights from CEO Jensen Huang are eagerly awaited by tech investors globally. A sarcastic joke for levity. Who knew that putting chips in things other than nachos would result in such a massive investment opportunity? This jest underscores the burgeoning profitability of AI chips, a market so promising that Nvidia is projected to hit a market cap of nearly $50 trillion within the next decade, according to early tech investor James Anderson. Consider this. Major tech companies are sinking a considerable portion of their war chests into AI infrastructure, encouraging a ripple effect throughout industries. Microsoft, Amazon, Alphabet, and Meta, worth more than most small nations combined, are reportedly amplifying their AI capabilities. This is not an isolated trend. Ives' analysis confirms that AI spending is showing no signs of letting up, hinting at a long-term horizon of high returns. This collective investment isn't just giving Nvidia a lifeline, it's turning it into a powerhouse of the future. But how does the substantial investment by major tech companies in AI infrastructure, which is turning Nvidia into a future powerhouse, reconcile with the volatility in Nvidia's stock, where despite significant gains, the company has faced sharp declines and a $900 billion market value drop since June? Let's find out. Hello everyone, and welcome back to Investocracy.
That's my last question. After everything that's just happened, it feels a little back to the future to me that we don't come out of this, repositioning or whatever it is and say, okay, time to rotate into the smaller caps and the mid caps and the value, this and whatever. It's kind of, okay, no, yields are lower. The NASDAQ's outperforming the Russell today. Nvidia's taking off. And what does that tell you? Or is it a head fake?
Well, it tells me if you look at the chart on the IWM, if you look at the chart on the small caps, those names, 45% or so of small caps are unprofitable companies. Back in the 90s, that number was 15%. So people want to travel where they have the fortified balance sheet, where they have earnings, where earnings are growing. And that is still large cap tech and technology as a whole. So, yes, I think we are back to the future. And no matter which sector you are investing in, it will evolve with chips, and that takes technology to do it.
But let's not put all our eggs in the bullish basket without acknowledging the flip side. Despite exceptional year-to-date gains, 117% to be precise, Nvidia has also experienced its share of sharp drops. The company is down $900 billion in market value since its June zenith. Yet, even this immense tumble hasn't dampened investor enthusiasm. The stock market is a roller coaster, and Nvidia has had its highs and lows. But, crucially, despite a 30% reduction from their 5-year peak valuations, stocks within the Magnificent Seven, which consists of Nvidia among other mega-cap entities, still stand 50% above their 5-year levels. The semi-ironic twist to this saga can be found in the antics of political and financial heavyweights. Take Nancy Pelosi, for instance. While trimming her Microsoft holdings, the former speaker chose to double down on Nvidia, buying more shares. Cynics might wonder if Pelosi knows something we don't, or perhaps she's just adhering to the oldest investment adage, buy the dip. Adding more credence to this bullish outlook is Nvidia's remarkable year-to-date performance. The stock closed at $104.75, reflecting a whopping 117.46% increase thus far, based on Benzinga Pro data. For a moment, imagine you're not an investor, but a thrill seeker at an amusement park. Nvidia is the gut-wrenching, high-reward roller coaster that promises to leave you both exhilarated and a bit breathless. Finally, the earnest projections of financial futurists like James Anderson paint a vivid picture. Driven by growing AI chip demand, Nvidia could realistically entertain a market cap of $50 trillion by 2034. This leap in market value isn't just conjecture, it's a calculated forecast grounded in the expanding landscape of artificial intelligence. But what does all of this mean to Nvidia stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Now, if you look at NVIDIA, since the introduction of ChatGPT and OpenAI at the end of 2022, you've seen their revenues go up about 4.5 times, not the 15.5 that Cisco saw. And you've seen their stock go up 600%, not the 4,000% that Cisco saw. And so, but Cisco also went through some horrific drawdowns within that rise of 4,000%, where it went down 26% intra-year in 1995, late 95, went down 38% in early 97, it went down 37% from peak to trough in late 1998. The stock was up each of those years, but I think we can all agree those were some horrific drawdowns because you were going through some digestion of all that internet spending. And I think that's what we're in for with Nvidia right now, which is you're going to get some digestion going on from all of this spend, because when you look at the companies that reported, to large part, their estimates went down in the future, and at a certain point, you have to justify the amount you're spending. And so with Nvidia, if you think about it from another, several years out, I think revenues will double from here. I think the stock will double from here, but I'm not sure I don't believe the stock's actually seen its lows for the year yet.
As the clock ticks down to August 28th, investors would do well to consider Nvidia as a cornerstone of their portfolios. With AI infrastructure spending showing no signs of slowing down, the stage is set for Nvidia to soar even higher. As of the last trading session, Nvidia shares stood strong, closing at $104.75. The general consensus is unshakable. Nvidia, with its intricate web of alliances and robust AI innovations, is positioned for growth. If you've been sitting on the edge, uncertain whether to leap into Nvidia stock, the forecasts make a compelling case. Analysts are confident that with the anticipated earnings report and the ever-expanding AI market, Nvidia could very well exceed current expectations. The might of Nvidia's financial promise lies not merely in trends, but in a track record of defying market gravity time and again. So, dear viewer, what do you think? Are you ready to invest in the AI future that Nvidia heralds, or are you content standing on the sidelines? With market speculations swirling and numbers that challenge gravitational pull, Nvidia is the stock of the moment. Your thoughts? Where do you see Nvidia heading in this electrifying era of AI? And there you have it, Nvidia, a probable future juggernaut of the AI landscape, promising extraordinary returns for those brave enough to invest in its journey. And finally, if you would like to know what Nvidia has been up to these past few days, go ahead and click on the next video on your screen. See you there.